Yeah, welcome to the chat. So, on today's lesson, this is specifically a lesson for technical traders who employ the candlestick technical tool as an analysis for exploring the chart. Let us take a minute for those who are beginners to explain what candlestick means and what we have right in front of us. As you can see, price rallying up, creating series of higher highs, lower highs and higher highs with a cluster of green candles. You can see these green candles, they signify buying pressure. Meanwhile, as you can see, a cluster of white candles right here, they signify selling pressure. While a candle that is neither green nor white like this candle, it signifies indecision in the market. Now let us explore the anatomy of candlesticks. For this green candle, the top here is what it is, the close. The bottom here is the open. So price opened in the bottom, price closed right here. While these wicks, you can see those are the high and low. So this was the lowest point where the sellers pushed price before buyers closed price further up, pushing price further up. And this is the topmost part where buyers pushed price before sellers closed in on them. Likewise, for this sell candle, this white candle, we have the open at the top here and we have the close at the top, at the bottom here, and we have the low here and we have the high here. So when price opened here, the buyers tried to push it up a bit before sellers pushed further down, and when price sold further down to this level, the buyers pushed it up before the sellers closed in on them, and this closed as a sell candle. There is a reality that must be known in the market. Either you want to make a decision to buy or sell, which depends on whichever direction the technicals is going to. Let us take, for instance, right here we have a candlestick formation. You are just looking at the technicals. You are not considering other factors, such as, because there are important factors to always consider before you take a trade. You need to take into consideration the timing. You need to take into consideration the days. You need to take into consideration the session, as well as other important factors. But right here we have a candlestick formation, which is a morning star. So for instance, once you see this sell candle and you have a buy candle here, once you see this sell candle here and you have a buy candle in this zone, you don't make any decision yet. You need to wait for another sell candle to form and close. So now you have this candle and this candle closing in on this sell candle. Then you can make a decision to buy or a decision to stay away from the market. Because if you are buying while this candle is forming before it closes, then you are setting yourself up for trouble, because before the close of this candle the market could do anything. So that is why the candlestick close is very important. Just mere seeing a candlestick forming, it is not enough signal yet until it closes, because we have strong buyers in this zone, and you need to know that before you buy you need to rely on stronger buyers, because right here you have stronger buyers that have already bought the price up to this level. So seeing this candlestick formation, we are aware that there are stronger buyers right here in this zone. So all we need to do, seeing stronger buyers in this zone, all we need to do is to be patient. And once we are patient, what happens? We just wait for price to activate the order and move in our intended direction. Because if you are not patient enough and merely just seeing this sell candle, this buy candle, and you don't have a buy candle that's closed above yet, and you make a decision to either buy or sell, the markets can't do anything. So you always need to wait for the close, and you need to have sensed stronger buyers already taking a position before you go in. So you don't just join in on this candle, you wait for the formation to be completed. Wait for the formation to be completed. Because if the formation is not completed yet, then we are doing nothing but setting ourselves up for failure. That is why the candlestick close will always be important to us as traders. So you don't just make your decision based on a forming candlestick, because doing that is counterproductive to a trader's success. And you always want to double down on what works and ignore what doesn't. So for instance, right here we have a sell pattern formation. You can see the bulls in this zone. You can see the sellers right here accumulating contract, and we can expect a manipulation to the downside. But just because we can see this sell candle that has not closed yet, I hope you can see this candle right here. It has not even closed below this. It has not closed yet as a sell candle. We do not make any decision until it breaks this zone and it closes as a sell candle. Then we can look at other factors before making a decision. That is why patience will always be a virtue in trading. So for instance, right here on Euro USD in the London session, we had an engulfing pattern, and you need to know that this engulfing pattern right here in this zone these are sellers here, and we can see buyers overpowering them. So right here you can see strong buyers that are ready to bid price higher, and that is when you make the decision, not when this particular engulfing candle is forming before it closes. You always need to wait for the close of the candle, wait for it to give you the perfect formation you want, then you can make your decision. So not knowing this, it is likely to make traders fall prey to the market. That is why you need to be aware of what is happening in the market at all times, as the market is not beyond what we see on the chart. All the information we need are right here on the chart, but the way we approach the chart is more important than just what we see. So let us take another example. For instance, on DXY, you can see a bearish engulfing that's formed. So for instance, when this was forming, you need to wait for this bearish candle to form, for these structures to break, then you can make your conclusion. Then what? Then you can make your conclusion. So to recap what we have said, for the technical traders, at all time you want to wait for the candle close before you make a decision to either buy or sell, because that is where success solely relies on. That is where success solely relies on. So right here we can see an engulfing candle. You can see a retest. So we wait for this close. We wait for this candle to close. And once the candle closes, you wait for price to draw back to any zone you mark out. You always do what? You always wait for the close. You can take as many examples as possible. For instance, let's say you're a trader that trades the daily candles and in this zone, before the day closes, you have a bearish engulfing. What do? You wait for the close of the day. If this day does not close, so this is a bullish engulfing, even though this pattern failed, you wait for the close of the day. If it doesn't close, you don't make any decision. You do not make the decision while the day is forming. You wait for the day to close. Let us go to the daily chart. You can see a candlestick formation right here that indicates a buy. So let us see on this particular day. So So let us say on this particular day, expecting a buy, you wait for it to close, then you buy. Plan your trade your plan, and most importantly, manage your risk and emotions.